Hey everyone, and welcome back to the channel where we decode the fascinating world of hard-to-borrow stocks and short squeeze mechanics. Today, we're diving deep into a name that recently popped onto our screener with some truly eye-watering metrics, the Growhub Limited, ticker TGHL. But first, a quick word. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, let's talk about TGHL, the Growhub Limited. This company operates in the technology and software infrastructure sector with a current market cap of $18.06 million. The Growhub isn't just a tech play, they are an investment holding company offering product traceability, data analytics, and product trading facilitation solutions both in Singapore and internationally. Their traceability solution, for example, helps organizations track products from raw materials all the way to the final consumer. It's an interesting niche. Looking at the recent price action, it's been a bit of a rollercoaster. Today, TGHL is down a significant 29.33%. However, zoom out a bit and you'll see it's still up 11.20% over the last 5 trading days, and an impressive 22.70% over the last 30 days. Today's volume sits at 2,293,900 shares, which is quite a bit lower than its 30-day average of 10,098,196 shares, giving it a relative volume of just 0.2x average. What's cost to borrow and why it matters? Before we get into why TGHL is catching our eye, let's quickly explain one of the most critical metrics for potential short squeezes, the cost to borrow, or CTB. Show graphic. CTB explained when a short seller wants to bet against a stock, they borrow shares, sell them, and hope to buy them back cheaper later. But borrowing shares isn't free. Brokers charge a fee, and that's the cost to borrow. It's typically expressed as an annualized percentage. The higher this fee, the more expensive it is for short sellers to maintain their positions. When CTB fees go sky high, even exceeding 100% or more annually, it signals intense demand to borrow those shares, and a very limited supply. For short sellers, these fees eat directly into their potential profits or quickly exacerbate their losses. Why this stock is hard to borrow right now. Now let's get specific with TGHL. This stock appeared on our hard to borrow screener for a very good reason. The annualized cost to borrow fee for TGHL is currently sitting at an astonishing 829.0%. Highlight 829.0% to put that in perspective. Short sellers are effectively paying nearly 8.3 times the value of the shares just to hold their short position for a year. What's even more striking is the momentum behind this fee. It surged by an incredible 347 percentage points over just the last 5 trading days alone. This tells us that demand for borrowing TGHL shares has exploded very recently, while the supply has dried up. Speaking of supply, there are currently only 100,000 shares of TGHL available to borrow. Compare that to the estimated float of 12.7 million shares, and you start to understand just how constrained the supply truly is. Our internal composite squeeze score, which factors some metrics like CTB level, CTB momentum, shrinking borrow supply, float size, and price/volume action, gives TGHL a score of 61.5 out of 100. That's a strong indicator of potential for volatility. Squeeze mechanics explained. So, how does this high cost to borrow lead to a short squeeze? It's a chain reaction. Chart animation, short squeeze cycle. When short sellers borrow shares and sell them, they owe those shares back. If the stock price starts to rise, perhaps due to positive news, increased buying interest, or simply too few shares available for shorting, the short sellers face a dilemma. Not only are their positions losing money as the stock goes up, but they are also bleeding money every day due to that massive 829.0% CTB fee for TGHL. At some point, the pressure becomes too great, and they are forced to cover their shorts. Covering means they have to buy shares back in the open market to return to the lender. This forced buying creates even more upward price momentum, which can trigger more short sellers to cover, creating a rapid, explosive move upward. That's the short squeeze. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also simply mean short sellers have extremely high conviction that the stock will eventually fall, and they are willing to pay dearly to maintain their bet. Dilution risk check. Another critical factor to consider when looking at potential squeezes is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. Geographic dilution explained this can significantly offset or even negate a short squeeze thesis because adding more shares to the market essentially increases the supply, making it easier for short sellers to find shares to cover and dampening any upward price momentum. For TGHL, we checked for recent dilutive SEC filings like SMIN S1, SMIN S3, or 424B over the last 90 days and found no recent filings that raised dilution concerns. Additionally, we found no recent reverse splits for TGHL in our look-back window, which can sometimes precede or follow other corporate actions that impact share structure. This is generally a positive sign for a squeeze thesis, as it reduces one major headwind. Once again, remember. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For TGHL, given its unique profile, here's what we'd be watching. Keep a close eye on that cost to borrow fee. Does it climb even higher, or does it start to ease? Watch the shares available to borrow. Will that 100,000 number shrink further, indicating even tighter supply? Show chart, TGHL live data, monitor the volume. Today's volume was significantly below average. A significant increase in volume, particularly on a green day, could signal increasing buying pressure. A naturally tracked price action. After today's substantial drop, how does it react over the next few days? Will it hold recent levels or see further declines? These metrics will give you a better understanding of the tug-of-war between buyers and short sellers in TGHL. The GrowHub Limited, TGHL, presents a fascinating case study with its astronomical 829.0% cost to borrow and rapidly shrinking share supply. While today's price action shows a significant pullback, the underlying metrics suggest it's a stock worth monitoring closely, strictly from an educational perspective on short squeeze dynamics. Remember, high CTB doesn't guarantee anything, but it certainly highlights significant market tension. If you found this breakdown of TGHL insightful, please hit that like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments what stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.